Let's talk more about the world with Tim Seymour, CIO of Seymour Asset Management. Tim, what's your hot take on how the whole world is like reinflated this year?
Well, first of all, great to be here, Brian. I think it's a combination of this has been a long-term underperformance trade. So I kind of believe in mean reversion, and I think the technicals tell you maybe we double bottomed August of 22 and then in Thanksgiving of 24. If you look at the charts on the relative underperformance of the MSCI world against the U.S. So, as someone that's been investing in international and emerging for 25, 30 years, we've seen long cycles here, and I think we're early in an international cycle, but it's underpinned by fundamentals. And the fundamentals include, if you think there's deregulation here in this country, I think this is a global trend. I think rate of change is always more important for markets, and I think this is where the relative dereg dynamic in Europe and even parts of Asia is more powerful on a relative basis than it is here. Valuations are always cheap. That's never the story. You mentioned Germany. I think the fiscal and historic dynamic of spending money that they don't believe they're supposed to spend. So the Germans have always been incredibly fiscally responsible. And I'm not saying what they're about to do is irresponsible. In fact, I think it's smart. Rearm Germany, rearm Europe, increase at least less reliance on energy sources, building out a lot of infrastructure. This is what's going to happen. So deficit spending in Europe and even parts of Asia, China, I think it's not the consumption bill you want to see, but China too is changing.
Yeah, and to your point, these markets have underperformed for years, and the U.S. was the place to be. So I guess the only question now is this like I know you're big into one-hit wonders, Tim. Is this a one-year wonder, or is this a multi-year cycle where some of these markets that we're showing on our beautiful wall here, they outperform us?
Well, I know at times, Brian, you are too shy, and Kajagoogoo is probably the greatest example of a one-hit wonder, and I know our audience was waiting for that. But no, this isn't a trade. This is an investment. This is a case where I think if you look at some of the trends that have been most exciting about investing in the U.S., whether it's hyperscalers, whether it's AI, whether it's obviously semiconductors, Taiwan Semi's numbers today. I mean, and let me know clearly, I'm a PM of an international ETF, IDEVO. And Taiwan Semi is one of the biggest positions in our book. So is Alibaba, which is one of the most exciting hyperscalers. And so I think some of the trends that have been investing international, that have made U.S. exciting, I think some of those trends are alive and well around the world. But again, I think you have global companies, world-class companies, in a world where I think investors, especially internationally, have been overweight. I'm not here to tell you U.S. exceptionalism is over, but I think it's peaked. I really do. And I'm not here to get into political dynamics. I just think there's a case to be made for world-class blue chip, bulletproof balance sheets growing their divs around the world.
Get this man off the airway. What, U.S. exceptionalism is over? Come on, Tim. Come on. We're up to 250.
Look, again, USA, let's wave the flag. U.S. exceptionalism's great. But you can't tell me that you can't find AI and infrastructure and hyperscaler and semiconductor trends around the world. That Novo Nordisk, which is really underperformed, but so is Lilly of late. So if you want trends and you want things that you can only get here, guess what? It's a global economy. But I'm here to say that actually as we become more isolationist, country by countries have become a lot more interesting. And that's the story. The story is that I think deregulation in other parts of the world is a big reason. That's why you want to own European banks as much as you want to own U.S., and I think even more so.